the oil prices and all that. Thankfully, the United States, we're not reliant on Iranian oil, obviously. And, we do so much more of our producing here domestically, thank goodness, that we're not so reliant on that Middle East oil.
Well, we have certainly had our fair share of interesting news as of late. Things geopolitically, globally, economically are in a little bit of chaos. And so, for perspective on that, we've got Chris McIntire, president and founder of McIntire Retirement Services. And Chris, we always appreciate your insight and perspective on things. When big news like this hits, do things get crazier for you?
Yeah, and it's funny because I got my notes here. It's like tariffs, trade wars, world wars, Israeli, Iran, inflation, interest rates, AI, lions and tigers and bears. Oh my.
Oh
So,
my. Yeah, there's a lot going on, right? I
yeah,
guess there always is, but
yeah,
it seems
yeah,
like a
yeah.
lot recently.
For sure, the geopolitical side of things has certainly been ramped up, and even here in the United States, the protests and things like that going on. It's a lot of unease for sure. And after we had the big sell-off there in the month of April, clients were nervous on, look, we're getting ready to take income. We've got all the, you have to calm the fears, if you will, and try to keep their emotions in check. And hey, and it's understandable. We're not saying it's wrong by any stretch, but yeah, there's when the world gets volatile, people have a tendency to want to do something rash a lot of times, and you've got to talk them through that because remember after the market corrected in the month of April, that one day Trump extended the tariffs or something like that, whatever the term I want to look for. I mean, the S&P 500 bounced 9% the next day, and that's why you can't make these rash decisions. You have to build that portfolio. If it's based for income, then you're still getting your dividends, your interest, that type of thing. And if you're, looking for longer term growth, you have to be able to build that portfolio around your risk tolerance so that you're not so headline driven, and that's the world we live in today. It is very headline driven.
Yeah. Yeah. And thankfully, things have come back in the financial markets and the stock market, and people feeling a little bit better about their 401ks and their portfolio does not make the world any more stable or predictable, as we have seen. So, what does that mean for us for our long-term planning and prospects? We'll talk through those issues, the lions, the tigers, the bears, oh my, here on the program today, and help you formulate your game plan for retirement with the assistance, with the insight, the perspective, and experience of Chris McIntire, president and founder of McIntire Retirement Services. If you've got questions, ladies and gentlemen, always invite your calls. Chris would love to hear from you and help you formulate your game plan for retirement, a personalized plan with diversified strategies to help you achieve your long-term goals. And if you'd like to get that plan put together, if you're worried about the conditions of the world or just want to see if anything can be improved in your picture, pick up the phone and give McIntire Retirement Services a call, 419 332 0532, 419 332 0532, 419 332 0532. Chris, as we are talking today, there has been a ceasefire brokered and temporarily. I mean, at first, it was not holding, and now they've sort of come back to the table, and it does seem to be holding, at least for now. But something tells me this is not the end of the story. This is not over. I mean, this has been going on for thousands of years, it seems. So I'm not sure if it's going to end overnight or this week.
I think when people say peace in the Middle East, I mean, is there another more oddball cliche than any of us could come up with? There's some pretty deep-seated I'll call it hatred there. And what is the is there going to be peace with Israel? And Israel certainly has the defense capabilities to strike, and but anyway. The oil prices and all that. Thankfully, the United States, we're not reliant on Iranian oil, obviously. And, we do so much more of our producing here domestically, thank goodness, that we're not so reliant on that Middle East oil. Now, they could certainly block the Strait of Hormuz, if you will, but, I would think the repercussions of that, from the US and Israel and other nations. Obviously, the European Union is upping their defense spending, which will make NATO stronger. So, some of the alliances here, are coming together in agreement on, peace through strength, I guess, if you will. And like was it Ronald Reagan that said trust but verify?
Yeah,
Yeah.
I think he was peace through strength as well.
Yes. Yep. And look what
Uh,
happened. Yep.
or maybe that was prior to that in World War II. Actually, now that I think about it, I'll have to go research that one. Potential involvement more globally though from Russia and China also plays into this, right? This is not just an isolated thing. We're not in an isolated world where there's a one-off tiny. We are all interconnected these days.
Yeah, without a doubt, it is a global economy, and that despite tariffs and all this other trade talk and protectionism, we import, we export, every country does. And, if we can work through these trade agreements, which it appears to be happening, obviously the market has certainly rebounded strongly after that April sell-off. And the U.S. economy is humming along here pretty good. And President Trump is trying to pressure the Federal Reserve to lower interest rates, which would certainly, help the economics. But their job isn't to help the housing market. The Federal Reserve's job is to keep inflation in check and full employment. And I think we'll get a couple more interest rate cuts as time goes on here throughout the year. And it would certainly help that housing market, people wanting to move up to the next neighborhood, but might have a 3% mortgage and don't want a 7% mortgage. That makes a lot of sense, obviously.
Indeed, indeed. And it seems Jerome Powell has been a little slow in interest rates cuts. Since our interest rates peaked, I think we've had three cuts on our side, where in the European Union, the European central banks have cut rates seven times, and their housing market seems to be moving a little faster as a result, Chris.
Yeah. It's certainly been a more aggressive monetary policy over there in the United Kingdom and the European Union as well. Japan also, and there are some economic issues here in China and also in Russia. So, and then you got to think what's going to happen with Iran. So, economic uncertainty. China's the third biggest economy in the world, and they are certainly struggling with some of the tariffs and whatnot because everybody bought everything before the tariffs went into force. And now I think we're going to see where the rubber meets the road with exactly what's going to happen and just how reliable or how many countries rely significantly on China. And many of them are probably wanting to divest and spread that risk out, especially the United States here with China being a very big adversary, and we buy a lot of minerals and all that to build up our military. God forbid we dig a hole someplace in the United States, but nobody wants it in their backyard, right?
No, indeed. Again, we are talking with Chris McIntire. Ladies and gentlemen, if you've got questions, if you'd like to get together your game plan for retirement, pick up the phone, give a call, 419-332-0532, 419-332-0532. I mean, Chris, you've got to keep your fingers on the pulse here of a lot of different things. Already we've talked about a number of issues. You've got to not only pay attention to them and understand the implications, how things could play out, or what impacts it could have. But then if a client calls, you've got to understand their personal concerns and how they play in. Are you hearing from a lot of people with concerns about what's going on in the world today,
We
this week?
certainly do because when we have a pattern of meeting with clients on a daily basis. So I typically have 4 to 5 appointments every single day. So we are in the midst of it, and sometimes it's just where's your gut at with all of this, and you find out where the real risk tolerance is, and if somebody's just retiring, obviously they're certainly more sensitive than somebody that's got 5 to 7 to 10 more years of working to do. So, you have to be able to adapt to the individual's particular situation. And, we're not a one size fits all firm. We kind of tailor to the individual as it should be.
Yep. Well, again, if you don't have a plan or would like to double check it, see if there's anything that can be approved or put together more efficiently, pick up the phone, give Chris McIntire a call, 419-332-0532, 419-332-0532. Chris, the most immediate impact I think that things could have, you mentioned the Strait of Hormuz and where all the oil tankers go through. That's a very narrow passage. Iran, the closest neighbor there. Could we see energy markets, inflation in oil prices? Do the domestic energy companies and stocks have a boost or a bust because of this? How do energy prices play into our larger economy? And is there a possible play or caution here?
Yeah, I actually had reached out to our investment research team there at Brookstone Capital Management and said, hey, what's what would we see happen here to energy stocks, for example, oil stocks in particular, if we get some sort of wider spread conflict or something. And it was some interesting commentary, and I'll save that here. I don't want to spill my candy here on the table for everybody to take there, but we've already had looked into that because we had a couple of clients who had worked in the oil industry had asked us about that. So,
Hmm.
and again, the U.S. doesn't get a lot of oil out of Iran in
Iran in
particular, but
particular, yeah.
yeah, yeah, it still has to flow through the Strait of Hormuz, obviously, and with the Houthi rebels there, apparently, the U.S. military strikes had a pretty significant impact on them, and also Israel was hitting them as well because they were the ones that were firing on some of the ships going through there, and they're just simply an extension of some of Iran's former circle of influence. So you had Hamas, or you still have Hamas, Hezbollah, and the Houthi rebels. So significantly have been weakened here, through some peace through strength, if you want to call it that, Peter. And will we get regime change in Iran? Because at one point Iran was a very modernistic society. Many of their youth have been educated in the West, the U.S. and Europe, and they're not all as strict religious doctrines that some of their mullahs and their leadership has right now. How's that for politically correct?
Yeah, yeah. Well, I mean, we're talking about geopolitical differences. I think that we've got to have some description in there, and we've got to talk about what those differences are, right, Chris? I mean, that's part of the conversation. But more to the point of this program and what you do each and every day, how does it impact us financially with our perspective and outlook and progress that we're making with our money, our investments, and our retirement planning? All of this, Chris, certainly could potentially lead to stock market volatility. And I know that that is nothing new. You deal with stock market volatility all of the time. But I do think that as we are looking at how far we've come over the last 10 to 15 years, there is a long way that we could fall. And a lot of people do not have the risk tolerance, do not have the stomach to go through significant market declines, like what could potentially happen. And so you try to structure people's plans with some balance to reflect that.
Oh, absolutely. Yeah. We incorporate a lot of safe strategies in portfolios for clients so that if the investment portfolio, takes a hit like it did in April, hey, can we come over here and, start using plan B and give plan A, time to recover? And for many of our clients, plan A is their safe strategy and plan B is, look, I'm going to let my investments run. I don't need them because we've got a plan A here. So, again, that's tailoring it to the individual and, trying to, if you've got an alternative to just simply drawing out a one plan, the more options that you have available, certainly the more flexibility that gives you to be able to, to shift when things get uncertain, for example. And, we come into the summer months here, and that's when we typically see a little bit more volatility from a historic perspective. And September and October specifically, and what will happen this year if it depends on where the tariffs and the trade agreements come in. Will September and October be historically normal, or will they be, if we get a couple of interest rate cuts, could those be bullish months? And that's what you have to wait and see. you can try and make your best predictions, but the world changes pretty quickly these days, as we've seen this year.
So do we play both sides of the fence and try to hedge our bet, have some growth opportunity that comes along with risk, but also play it safe with a portion? And Chris, where does that change come in? Like you mentioned that for a lot of your clients, the safe plan is the plan A. I know for most of our lives, we're told and taught to take risk to get further ahead, to get financial growth. But at a certain point in time, I think that has kind of always been what was recommended, that we shift more towards safety as we get to a certain point. And how do we balance that, I guess, is the root of that question.
Yeah, that's a great question, and tailoring that to the individual for sure. And like dividend stocks, right, are different than your speculative growth stocks, for example. So you've got the dividends coming in, and some big companies that have been around for you could say centuries if you want to. The Walmarts of the world, the Procter and Gambles, the Johnson and Johnsons, those consumer staples, those typically hold up pretty well when the market gets volatile. And you get a dividend, so you're getting reward for your work. You can take the dividend as income, you can reinvest it. So when the stock price goes down, your reinvested dividends buy more shares, versus the speculative, hey, I'm rolling the dice walking out here on the skinny branches kind of stock investing. So, that's one option. The bond market is performing more normally now. And I would say, with the exception of longer term US Treasuries, the more, corporate bond market, let's say, is performing much better now that interest rates have normalized. And then if we get a couple of cuts in interest rates, those bond values could also increase. So two ways to make money in bonds is the value of the bond going up plus the interest payment or the coupon that it is paying.
Bonds had a pretty terrible year in 2022 and through 21, 22, 23, really since the COVID time have been a little upside down of their normal behavior. Not a typical bond and interest rate or yield environment, Chris.
Yeah, yeah, without question there. 2022, 2023, probably two of the worst years basically for the entire bond market in history, because they raised interest rates 11 times. That's something that normally doesn't happen. So, if you weathered that storm, your 60-40 portfolio, 60% stocks, 40% bonds, that had been in the headlines, back then, to say, hey, is this portfolio broken? It's like, well, I mean, hey, I can say any portfolio has a point where it's not working. That doesn't mean it's broken,
Mm.
because those interest payments continue to come in those bond mutual funds and whatnot that you have, and then they buy bonds that are paying higher interest rates. So, most people, all they look at is, where was my statement the month before? Where is it today? I lost money. Let's do something different. It's like, they don't realize that, inside those bond funds, you're paying more interest, you're buying future higher rates of return, because as bonds mature, the fund manager buys new bonds. When interest rates go up, they buy new bonds at higher interest rates. So, trying to help educate. And I just had a couple of those conversations this week, because they're like, well, boy, we haven't made any money in the last 6, 7 months. And it's like, you bring up the S&P 500. I'm like, well, that's a 17% drop. And you went down four.
Mhm.
Is that what we're sweating? So, and I'll give you an example. You know, a lot of investors would say, I can handle a 4% drop. That's not terrible. I mean, that happens. But if they say, well, I lost $40,000, and you say, yeah, but that's only 4%. And so, yeah, but $40,000 is a lot of money, and 4% isn't much. Sometimes they're the same thing, right? So,
Quantifies it a little differently.
yeah.
Yeah.
Yep. You got to quantify it. And, especially when clients are taking income and, let's say we got a dividend portfolio of $1 million. All right. And those dividends are 4%. Okay. Well, if the stock price goes down, okay, that doesn't mean they've cut the dividend. So your income is going to stay the same if you've got good, healthy companies with a long track record, and that way you can stomach the price change of the stock, because you're not selling the stock to create your needs. You're just living off of the dividends or the interest if you got a bond portfolio as well. And so, educating clients that way because they don't see all that stuff.
Hmm.
At once a month they look at their statement and they're like, all right, well, this isn't working. And it's like, yeah, but it's not broken. Every once in a while you're going to go through economic cycle. So trying to help them educate and again check emotion at the door, right?
Follow up to that though, Chris. Does the current bond and interest rate environment actually bode well for those more conservative investors? I mean, we've got all of this going on with volatility and geopolitical conflicts that we've talked about, Russia, Ukraine, Israel, Iran, tariffs. There's been more of a flight to safety. I've heard that terminology many times over recent weeks here. The flight to safety. Jerome Powell and the Fed have been a little slower in lowering these interest rates. Does that bode well for those seeking those more safe haven assets and the higher yields and interest rates, something a little bit more steady and predictable?
Yeah, yeah, without a question there, Peter, because money market accounts still kicking in there about 4%. CD rates have certainly come down. I think if we go back 18 months ago or so, five and a quarter, maybe even five and a half was doable. And now most of those are renewing, in that 4 to 4.25% range. And longer term isn't better. Shorter terms are better on the CD side. Now we do a lot of fixed rate annuities, 2, 3, 4, 5 year fixed rate annuities in that 5% range because those are off of the bond market and bond yields have held in there very nicely because insurance companies buy lots of bonds. That's why their rates are different than what CD rates are because that's more, from the Federal Reserve side of things. And then, we use some specialty notes called structured notes on the Brookstone side that offer a pretty good degree of protection. And, some of those are 8.5, 9% for 1 year notes with no loss potential unless the market fell by 30% or more in that 1 year time frame. So, good, just some good ways to help offset risk for sure.
Well, there are options out there, but you got to strike a balance. And again, ladies and gentlemen, if you'd like to find out about any of these options, see where, how, when, and if they should be utilized in your portfolio, pick up the phone and give Chris McIntire a call, 419-332-0532, 419-332-0532. Chris, speaking of finding balance, I came across this post and I thought it was interesting that I'd share here. It is from a poster in Santa Barbara, California, but said, "I'm 77. I created 4 successful businesses, married 2 beautiful women, one at a time." He notes,
Okay.
had 2 great sons, and retired at 49. That seems pretty successful. My life has been full, and really, it doesn't matter. None of it. I wish I'd known all that at the beginning, that it just wouldn't matter. I beat myself up most of my life trying to accomplish success, and I could have had a much easier time of it. I was chasing someone else's dream. At the end of life, and I know that's just around the corner. I can't speak for all wealthy people, but I know ones that are pretty empty. I could have learned to play the piano, painted, sculpted, read more books, learned to dance the salsa, had more dogs. There are no mulligans. If you don't get it right the first time, too bad for you. I'm too old to climb mountains that I've always wanted to climb, too old to buy a dog, too old to learn to surf, too old to learn the piano. All the good stuff is behind me. How do we not get stuck in this kind of mentality, Chris?
Man, that's a harsh statement right there, buddy. And you and I being self-employed, I mean, we can relate. We
We're
work.
here grinding.
Yep, yep. People ask me, "What do you do? What are your hobbies?" I'm like, I don't have any.
I work.
Yep, I work, and every once in a while I get to take a boat out for a ride and do a little travel. So, but again, self-employed, nobody to blame but myself.
Well,
And
how does the average person, how do we live life along the way, but also prepare ourselves for a secure and confident financial future?
yeah, and especially like in a married couple, you got to have those types of conversations, and some of those get uncomfortable. I help people have those conversations. You get a husband who's been on the road or a wife who's been on the road traveling for work for 25 years, and they retire. The last thing they want to do is start walking into more hotel rooms. And, and then you got a spouse that has stayed home and, been a domestic housekeeper, which obviously is a ton of work as well. And they're wanting to hit the road. And, so you've got to have and try to strike that balance. So, and again, my dad said, look, happy wife equals a happy life. So that's the mantra that I go by. And, Robin and I split everything right down the middle, 70-30, and that just makes it work for us.
I've heard it's happy spouse, happy house, right, Chris?
Yeah.
It goes both ways.
But as I come up on the age of 60, it's like, look, I mean, this, trying to strike the work-life balance in there as well with a successful business practice here, and that grows, and you go through the growing pains of that and hiring. And as you know, Peter, that's probably the hardest thing that we have to do is hire the right people. And do they stick around or do they end up leaving in 18 months? It's not like our parents who worked at the same place almost their entire career, unless the plant closed down or something. And we have a lot of that here in the automotive side of things here in Northwest Ohio, where a lot of folks had to go find different careers because of major corporate structure changes. And, we're seeing that more and more often right now. But man, in the, trying to, because we have to leverage someone else's time for us to free up some of our own. And that's a challenge for sure.
Yep. Well, I think the key, Chris, as always, it seems to come back to this point: planning. Yeah, you have to have a plan for how to have that balance during your working career and beyond, how to make sure that you are confident today, but remain confident into your financial future. There are certain topics that are always important and some that come up that we just can't ignore, that are more of the moment hot topics, but coming up with and having that plan that you can always turn back to and that grows and evolves along with your life. That is what the conversation should be about for lasting financial confidence and endurance, ladies and gentlemen. And as always on the program, Chris McIntire makes one big offer, and that is to help you structure and put together that personalized plan for you in your situation. If you'd like to get your game plan for retirement, pick up the phone and give Chris McIntire Retirement Services a call. They help savers and investors better determine your outcome and map that road. That is the game plan for retirement, the written plan addressing income, investments, taxes, healthcare, legacy, trying to be as efficient and effective in all of those areas. So specifically, if you'd like to learn how to retire, how to create more income, how to pay less in taxes, how to optimize Social Security, this is a process that you need to take part in. Pick up the phone, give a call, 419-332-0532, 419-332-0532, 419-332-0532. Give Chris McIntire Retirement Services a call. Get the game plan for retirement in your hands to help better and improve your financial outlook this year and all the years moving forward. Chris, we always appreciate your perspective on the hot topics of the day and those tried and true strategies that we all need to implement.
Hey, my pleasure. Thanks for listening, everybody. God bless America and be safe out there.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.